The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 30th, wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I, that we do all that we can do to have a wonderful Wednesday. And, of course, welcome to all our new listeners here. Remember, Hotel California, that's what we like to call TFNN. It opens now at 8 a.m. Our man John Logan kicks us off with a show called the Global Market Pulse. Great show today, John. And tune in, folks. You can always get that at tfnn.mobi. That means if you're on your way to work, turn off that radio and go ahead and pick us up, put in an earpiece or a speaker, what have you, and just go to tfnn.mobi and get live stream of this show, all the shows out here at TFNN. Of course, if you'd like to actually see the live stream, being able to see pictures, just simply go to the homepage of tfnn.com. Upper right-hand side, you'll see a button, 3 little smartphones on that. Click on that. The show will stream live to your device. This show is archived on Channel 9. My 10 o'clock show is archived on Channel 10 as well. Now, look, my outcome here, it's absolutely to teach how to master the tools for trading. That includes taking a look at the lightning bolt patterns. That's what we refer to as the A to B equals CD pattern. We take a look at Fibonacci expansion and retracement because the markets are either expanding or they're retracing, so we take a look at those. The combination of those two actually are what form the Gartley buy and sell patterns, the butterfly buy and sell patterns. And, of course, you want to make sure that you know what the bulls and bears are doing. And they leave their messages, they leave their calling cards by creating candlesticks, Japanese candlestick patterns out there. So we'll look at those. And, of course, if you're a long-time viewer, long-time listener, you know that I like to work on the tools of the mind because, you know, quite frankly, when it comes to trading, 80% of trading is psychological. The other 20%, well, that's just between your ears out there. So here's a true story. Back in 1845, 2 brothers made their way to America from Germany. The older brother, he had learned the trade of being able to make sauerkraut. He couldn't wait to land in New York and then head on out to California, you know, and begin his business out there. Now, the younger brother, he decided he wanted to stay behind, go to school and learn about soil, learn about rocks and things like that, and that's what he did. A couple years later, the younger brother set out by stagecoach. Imagine that, folks, by stagecoach to go visit his older brother. Upon arriving, his older brother, he couldn't wait to show him the fields, his cabbage patch fields out there. And, of course, they were mighty large and mighty fine. And taking him out to the cabbage patch, the younger brother, of course, because of his, he liked to get down in the dirt. And he reached down there and he said, "Mighty fine soil you have here, brother." And, of course, what they did, there was a stream that was running through the property. So they went down to the stream. The younger brother reached down to wipe off his hands, and he picked up this quartz. And he looked at it, and he said to his older brother, "Brother, do you know what you have here?" The older brother said, "No, I don't." He said, "This is gold. You've been growing your cabbage on a gold mine out there." True story. One of the largest gold mines in California, folks, was grown on a gold mine out there. Now, how do you put that in perspective? Look, I say welcome to our gold mine here at TFNN. All day long, a gold mine of different technicians providing you with their tools. After my shows, you've got Basil Chapman. He'll show you the Chapman wave. After that, we've got Larry Pesavento. We've got Daryl Martin. He'll show you about the Nadex platform. David White, he'll show you about the power law vector indicator. And then, of course, taking a look at time and volume and swing points. Our man Tom O'Brien, the leader of the pack out there, from 3 to 5. And, of course, Andy Heck from 5 to 6. So welcome to our gold mine, what we like to call the Hotel California. This is Wonderful Wednesday. Of course, this is an interactive show. That means you can give us a call at 877-927-6645. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures up 51 points, or trade out at 16,896. S&P futures up 7 1/4, trading out at 1970.25. NASDAQ futures up 22 points, up about 0.6%, trading out at 39.74. Russell 2000 up 10 10 points or so, trading in the 1148 range. King dollar up about 240 ticks, up 24 cents, trade out 81.55. GDP numbers out. I guess the economy supposedly grew by about 4% out there versus I think maybe the expectation was 3%. We saw futures take off, so we'll take a look at charts, get a feel for what all that meant. Gold moved lower initially, now down about $3. So really a flat trading session. It's trading at $12.95. Silver's up 3 pennies at $20.62 out there. Let's see what's going on across the globe out here. The DAX flat, up 6 points, up 7 points. Actually, I consider that to be pretty bullish out there because all the talk was after the Europeans were going to go ahead and level some sanctions against the Russians out there. One would have expected their markets to crater, and at least we can say at this stage their market has not cratered. The FTSE is off 14 points, so a flat market out there. In Asia last night, Nikkei ended up finishing up 28 points. That itself is flat. The Hang Seng up 0.4%, up 92 points, and the Shanghai off 2. Again, our call number is 877-927-6648. You know, one of the actions as a result of, is it the GDP numbers out here that took place is your friend and mine, the Euro-Japanese yen. Of course, we do pay attention to this, although I have to tell you, the market hasn't paid much attention to it here over the course of the past several weeks. But nonetheless, we don't want to just be friends and foes and only be a good friend to the euro-yen when it works for us. We still want to take a look at it. And if we take a look, let me first put up the daily chart as we take a look at this currency pair. One of the things that you'll notice in taking a look at the currency pair, well, number one, it makes some great patterns out here. You'll see some Gartley buy and sell patterns. And in this case here, you'll also see what if I pull this back, you'll see a nice rising price channel. That's the black diagonal lines going up from lower left to upper right out here. Now, what's interesting on the daily chart is price is trying to get back inside its old friend, its trend to move higher out there. The daily chart shows that it really actually still is inside of the trend out there. Because I use the open and close of a candle, taught to us by none other than Bud Rolfs out there. And so the channel lines are going to be just slightly different on different time frames out here. Nonetheless, you've got a fairly looking good daily candle out here as we speak today. That says, you know what, let's go take a look and see what's going on an intraday chart out here. And the intraday chart, remember, price channels are going to use different, they're going to use different bodies if you're going to use bodies of candles, and I suggest that you do. This looks to me to be about the descending price channel inside on a 120-minute chart, by the way. That's a 2-hour time frame inside the Euro-Japanese yen. And what we can see here is that it's busted through. It's busted through its descending price channel. Now, what it hasn't done here as of yet is bust through, come back, test it, retest it, and then say, see ya, don't want to be ya, I want to move higher. Now, what it does look like to me, you can see the Euro-Japanese yen. If you're looking at my chart out here, if you're just listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. You'll see on a 14-bar basis, on a 120-minute time frame, that the Euro-Japanese yen has also gotten into what? It's gotten into that extreme overbought condition. It says that at some point in time here, it doesn't have to be 9:17 a.m., but probably within the hour, you'll start to see this currency pair begin to move sideways or pull back. Those are really the only two ways that you can work off an overbought or oversold condition. In this case here, we're talking about overbought. Now, it can go ahead and complete the 1 A to B equals CD, take you up to 137.50. Look, the reason that we take a look at this is just simply because of its correlation, directional correlation, that is, to the U.S. Stock market out there. So that's what's going on inside of that currency pair. If we come back, yesterday, let's go pick up where we left off yesterday. We were taking a look at the Dow futures because the Dow has arguably been the weaker link in the market. Now, that's not to say that it's taken over for the Russell 2000, which is even weaker than that. But the Dow here is something we want to pay attention to because really, if you go under the covers of the 30 stocks out inside of the Dow, what you'll find is it's just the top weighted stocks. It's just the IBMs, the ExxonMobil, the Chevrons, the Visas out there. It's the large cap stocks out there that are actually holding the Dow up, whereas other stocks like General Electric, United Technologies, and many others are actually pulling the Dow down. But what we know about the Dow here is just forget about that. let's forget about that. What we know about the Dow is as they have moved lower, even yesterday, as we went into the close, into the 4 p.m. cash close, that is, we saw a nice wide-ranging bar cascading down. That's where my cursor is at right here. And price, in essence, stopped right at the bottom of that descending price. It actually kind of broke through it for just a tad. Didn't last very long because by the 8 o'clock time frame out there, 10 o'clock time frame, price had gotten back inside there. You're back inside it. Now, yesterday what we were noticing was the retracement from its most recent. This is a 2-hour chart that we're looking at here. And the retracement that it made yesterday and what stopped it in its tracks was that good old sweet 618 retracement. Well, at this stage here, if we take a look at the retracement that has taken place thus far, from yesterday's high down to yesterday's low, it's almost made a 0.618 retracement. 16,935 would have been the number. And the celebration in the futures market after the GDP numbers, it got up to 16,926. 16,926 versus 16,935, 9 points. I'd say it's basically made it. Look, folks, if it doesn't move higher, this actually says that the Dow wants to go ahead and try to break lower. 877-927-6648. This is TFNN. This is Steve Rhodes, and we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let me finish that thought there on that 120-minute chart here for the Dow, because we've got competing patterns, bullish and bearish out here. And if we just simply take a look at retracements, that's all that we were doing. Let me go ahead. I'll delete this if you're watching us on Tiger TV. So if we take a look at yesterday's action, we really went from the swing point high that came in around 8 o'clock in the morning on July 24th out there. And the market moved from the 17,063 level down to a low that was put in here during that 12 noon, so 10 to 12 noon. It's a 2-hour chart that we're looking at on July 28th. As price made its way down to 16,808. If we take a look at from high to low, the market made a 0.618 retracement, often an area where passengers get let off of the elevator on the way up. Now, I'm going to go ahead. Let me get rid of the A to B equals CD pattern out here. You can always draw that back in. What you want to notice about that candle session, market wasn't really overbought in this case here, so it doesn't really qualify as a key reversal type session. But nonetheless, it was absolutely a reversal session. Bearish engulfing candle, the prior candle's high and low was exceeded out there, and so the bulls, the bears, I should say, they're camped out right at around that level. There's sellers just waiting. They're twitchy sellers out there. They're waiting to sell at about the 16,993, 16,966 type area. So in order for the bulls to really overcome the bears, you've got this rising price channel, so like defending their lows, they're just not making any advances in being able to accumulate more territory out there. In order to do that today, if you can see a close above 16,993, it tells you that the bears, they just simply have fallen back to some previous lines out here, which are probably in that 17,063-ish type range. So we've got either an A to B equals CD to the upside, or an A to B equals CD to the downside that is forming here. Again, if we take a look at, so now we've got that retracement. Let's go ahead and get rid of that. How is it that Stevie-san can come up with that? Well, if we take a look at the retracement off of yesterday's low to yesterday's high, what we'll also see is the retracement yesterday morning coming into the close at 4 o'clock, really at 5:15 out here. Gotta love that Who song, the 5:15. In any event, it was almost an exact 0.786 retracement there. 16,848 was the number. The actual open of the session here came at 16,848. You gotta love that. And so therefore we could have an A to B equals C to the upside. I don't know which of these two patterns are going to unfold here. I know that the bulls are defending that rising price channel, and so you're either going to have an A to B equals CD to the upside. The A to B equals C to the upside here says that the bulls will be able to overtake those highs at 16,993, and it'll take price in the 17,025, maybe 17,075. And if it can do that, that says it'll go test the actual highs out there from around 12 noon, between 10 and 12 noon on the trading session of July 17th. And that's going to be an important area for us to watch out here. Likewise, it could be an A to B equals CD to the downside. We take a look at the retracement so far this morning. very tepid, very mild and meek. Well, it's been a 0.61 retracement, much like yesterday's. So there could be two A to B equals CD patterns. I don't know which one is forming. I do know that with the Euro-Japanese yen moving higher, what it should signal to us is a market that also wants to do the same out here. So coming out of the gates, that should really be where we would be leaning towards. However, we'll see if the bears are going to go ahead and fire away right as we open. Now, in the pre-markets out here, a number of things moving to the upside. Leading the charge dollar-wise is Regeneron Pharmaceuticals. Their ticker symbol is REGN. A couple of phase 3 trials, very positive results. Closed at 304, trading at 330. So it's going to be taking out some swing points. It's going to be taking out some swing points and forming. It looks like forming an A to B equals CD to the upside out here. That A to B equals CD pattern coming off of the low here from June the 27th. That's going to be your A point. Your B point is the swing from July 14th. The C point out here is going to be the July 17th area. 1-to-1 A to B equals CD. Says he gets all the way back up to the highs from the trading session of March 6th out there. Those highs are at the 352 level. So 346, 352 is likely the area where Regeneron Pharmaceuticals wants to head to. To the downside, Tesla Motors jumping in on the fray out here. It closed at, where is it? Closed at 225. Nah, it's not really jumping in on the fray. That's nothing big. It's trading at 220. We've got Rayonier Advanced Materials. They closed at $37. They're trading at $34 out here. So that is trading to the downside. When we get back, we'll go see how this market's going to pop, whether it's going to continue moving higher or whether it's going to drop. This is Steve Rhodes. This is TFNN. Welcome to the show. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We have the Dow up 65 points, trade out of 16,978. S&P up about 8 points at 1978. NASDAQ Composite up 29 points, trade in 44.71. Russell 2000 up 8 points at 11.49. NDX 100 up 25. New York Stock Exchange up 33. Gold back $3. Silver up 3 pennies. Light sweet crude up 36 cents. Leading the charge to the downside. Looks like Buffalo Wild Wings going to have a wild trading session. Already up about 9%, down $15 out here. Looks like, let's see here, they're out with numbers. The numbers go like this. Revenues of $365 million versus $305 from the prior year for their second quarter. Sounds like a lot of us were eating chicken wings. Maybe that was some of the World Cup games that were going on out there. Maybe with some Stanley Cup action as well. And, of course, we had the NBA Finals. In any event, they were selling lots of chicken wings. Their earnings, not too shabby, $23.7 million versus $16.5. Nonetheless, it is trading to the downside. They zoomed out. How about that? I don't know what happened there, Alberto. Hopefully that helps out. And so let's just take a look at, give me a second here. I'll pull up the chart. Here we go. So let's take a look at the chart out here. As we take a look at Buffalo Wild Wings right now, boy, already trading down into a swing point. It looked like this was trying to form an A to B equals CD to the upside. Just yesterday, as a matter of fact, it was trading into a swing point, a B point, didn't close above it. That number was 167.36 out there, 438,000 shares, and yesterday 1.6 million shares moving into it. Well, today, gapping down 248,000 shares in the first 6 minutes out here, trying to take out this, what was going to be the C point, so trying to take out a swing point low, its most recent swing point low. We'll see if it can do that. That low is 150.43, and that's only got volume there of 243,000 shares, so it's moving into that area with volume. So let's take a look at this. Let's move back here. Let's see where Buffalo Wild Wings could move down to. Let's go ahead and get rid of the A to B equals CD pattern out here. Now, it won't be forming A to B equals CD to the downside, but if it does take out that swing point low, you can already see the target, right? If you're watching us on Tiger TV, it has an exposed high-volume low that has not been tested. And that's the swing point from the trading session of February the 5th out there. And that level takes you anywhere between 123.05 to 143.84. Volume on that trading session, 3.3 million shares. So if it breaks the current swing point, you'd have to say that is a likely spot where Buffalo Wild Wings, BWLD, will travel to. And that is the leader to the the downside out here. You've got Rockwell Automation also off 6% this morning, down $6.80. They were also out with numbers. They generated $1.65 billion versus $1.62 in total sales from the prior year. Net income $199 versus $203 million out here. Gapping down big. Looks like it's also got some volume accelerating. This has a high volume. This had some high volume back here on the trading session of April 29th. It is now below that area. Not really an A to B equals C to the downside. So let's pull this back. Let's see if we can identify inside of Rockwell where it is likely headed to. Volume-wise, nothing. Well, actually, I got to pull this back a little bit further out here. That's too bad. This did break out. The last time we saw a real sign of strength inside of Rockwell was not Norman Rockwell, was back on the trading session of July 30th, 2013. That's all the way down at the $92 level. It's trading right now at $113, and you'd have to say that that would be one of its potential targets out there. So Rockwell not doing well this morning. You've got Sturm Ruger out there, the gun company. They, too, were out with numbers. Looks like their net income was 20, and here's the news here that shows net income and comprehensive income. You know, folks, I'm a bean counter at heart out there, and I can tell you I haven't heard of the word comprehensive income, but they've got it out there. Their net income $22.2 million versus $32 million out there. Let's go take a look. RGR, by the way, is its ticker symbol, so let's go see what it is doing. So moving to the downside with volume. This has been in a decided downtrend ever since they had made a high back here in January 16, 2014. So that downtrend still in place today. Let's put this on a weekly chart. Let's try to get a feel for where Sturm Ruger might be headed to on a weekly time frame out here. The weekly time frame shows, see if we've got a volume bar. Oh, we do. So, okay, so this is good. So when we take a look at volume inside of Sturm Ruger, it takes you all the way back to December 17, 2012. The low there is $40. Even Steven, the high is $46.57. You're trading at $52.40. Pretty good chance that it's headed to at least that, did I say $52.40? I meant $46.57. Pretty good. It's trading at $52.40. So pretty good chance it's headed at headed to $46.57 out there. RGR is the ticker symbol. How about some things that are popping to the upside? I mentioned Regenerant Pharmaceuticals before we opened the show. Let's go take a look at it on its daily chart. Now, let's first what this had. Let's just take a look at the daily chart. Screw that. Excuse me. I'm on live here. Let's take a look at what it's doing on the daily basis out here. So you've got pretty decent volume behind the move. Already 456,000 shares out here. And it really says that it wants to go test the highs, in my opinion. That's going to be that March 6th area, right around the 352 to 338 range out there. Let's take a look at what else we've got moving to the upside. You've got Twitter. Twitter out with numbers after the bell. They're up a nice 24% here this morning. I believe it's trading into an area where it did show a sign of weakness. Actually, there's a couple of them where it had broken down. But it looks like where Twitter is headed to, it had this little sign of weakness back on February 6th, kind of a new IPO to have a sign of weakness so early in the game. Nonetheless, it does have a bit of a supply line anywhere between the February 5th level, which is 67.24, down to the February 6th level. That's right around 49.99. It's traded 47.73. We'll see if those folks who got in on Twitter at the early stage are just saying, you know what, I've had enough of this equity. I just want my money back. And so we'll see if that acts as a supply line area enough to go ahead and stop the advance of Twitter. To the upside, we also have Asimil Holdings, ASML is the ticker symbol. It's trading right now 92.17. It has gapped up. It's trying to make this thing has got gaps all over the place. So I'm wondering if there is some currency valuations involved with this equity. Of course, there's always one way to find out, right? Let's do that by taking a look and see a little bit about what they do. So ASML is the ticker symbol. I would imagine that. So when you take a look at the chart and you see all those kinds of gaps out there, there must be some kind. Well, my assumption is it has something to do with currency. But let's see. They design, manufacture, and service semiconductor processing equipment. Where are these guys headquartered out here? Where is the headquarters? Where's the phone number? Yeah, phone number. They're in the Netherlands, of course. Okay, so you got some currency issues with regard to Asimal Holdings out here. So forget all of the gaps. Let's just take a look and see where it's trading into, get a feel for it. At this stage here, you'd have to say it wants to go ahead and make a run for its most recent swing point high. Kind of a bit of a consolidation pattern, but I would expect this to try to make a run for the July 7th high, right around the $96 to $95 range out there. Let's take a look here at what else do we have moving to the let me get rid of this here. To the upside, we've got Panera Bread up a nice 5%. So let's see, they must be out with numbers as well. $49 million in income versus $51, so not beating the prior second quarter numbers out there. Revenue-wise, they did generate larger top-line growth, $631 million versus $589. I don't know what same-store sales might take a look at. But let's take a look at Panera because this thing has been in a downtrend for sure. Made a high most recently back here on March the 21st, out at a level of about 193.18. Made a low here just a few days ago, and is trying to close above its market profile resistance level, which is at 150.85, doing a pretty good job so far. Traded at 153.89. Volume behind the move so far this morning. Volume of 388,000 shares. I'll get it right if you just stick with me. Last time that Panera, PNRA is the ticker symbol, had some troubles. It's had a couple of them. The real trouble began here on the, I won't say the real trouble. The last real trouble is more accurately stated. It was on April 30th when it gapped down with 2.6 million shares out there, and it's really the top of that gap, meaning the prior session, that is resistance. So if we take a look at where resistance is very likely for Panera Bread, I'm just going to draw a horizontal line at about the 159.38 level. If it can overtake that, and it can move in there with volume of more than 2.6 million shares, and it could do it today, could move up with volume. It's already done about 400,000 shares in 14 minutes of trading, so it does look like it's got a little bit of momentum behind it. And if we take a look at just simply a short-term trend line coming off of the high back here from March 21st, 2014, well, it's broken that trend, so that's clear that it's done that. But let's pull this back just a tad further inside of Panera Bread because this thing has been moving downward. Well, no, that is really coming off of that trend. So Panera, PNRA, wants to get in on the on all the action that all these great food companies are having out there. Chipotle, El Pollo Loco out there, and now Panera trying to change its trend. May be worth noting and watching its price action over the next couple of days out there. What else do we have to take a look at out here? Let's go take a look at some currency pairs. We looked at the euro, Japanese yen, so we'll take a look at what's going on inside the other currency pairs. Yeah, we want to take specifically a look at the U.S. dollar, Japanese yen, right? We looked at a chart yesterday. Oh, how about that? Remember, we took a look at the U.S. dollar, Japanese yen yesterday, pointed out, if you didn't catch the show, let me just recap for you what it is that we are looking at. Again, if you're listening to us on the radio, just go ahead and catch the archive of this show on Channel 9 when you get to in about an hour or so. That'll be up and available for your viewing. And if you do like trading the currency pairs, well, the U.S. dollar, Japanese yen just broke above a resistance level, a trend level, a downward trend level, much like it did back on the trading session of November 11, 2013. Sounds like lucky Las Vegas in rolling the dice out there. And then the U.S. dollar, Japanese yen went ahead and just simply made a Fibonacci expansion. If you go from the swing point high, which was on May 22nd, that was out at the 103.56 level, down to its swing point low at about the June 14, 2013 area. The actual 1.272 level was 106. It never made it all the way up to that area. Maybe that's where she's headed now. But if we take a look at the U.S. dollar, Japanese yen, we noticed the previous price behavior. We noticed a couple of Gartley buy patterns. It was the yellow one, the larger one that Stevie was waiting for to be fulfilled. Looks like that is not going to happen because instead we've got the smaller 0.786 Gartley buy pattern that has come to fruition. And let's take a look at that small A to B equals CD off of that pattern out here. So let's go see where that price projection takes us to. The 1-to-1 says 103. 103. So I would suspect that we will see the U.S. dollar, Japanese yen head up to that level, perhaps even to the 103.56 area before it decides to make a retracement or pull back. But the trend has now been busted inside the U.S. dollar, Japanese yen. That is a channel line, trend line, but really it's the channel line. That's the red diagonal line on my screen out here. So if you were short this currency pair, you would have to say, boy, not so fast out there. You might not want to be short this currency pair because it has broken a trend and a channel line, and you can take a look at the last time that it did that. So things look mighty bullish as we speak right now for this currency pair. Let's see what's going on inside the Great British Pound. That was struggling. That was moving to the downside. We had pointed out a Gartley buy pattern that it could be forming. That's at the 1.688 level. It's trading at 1.69 right now. I don't know that that's really where it's going to that's where it's really going to stop. You can see it's trading also inside that little wide-ranging bar from June the 12th. And inside the currency pairs, we don't have volume. That's where really paying attention to the bars, the size of the bars, reversal signals is very influential, very helpful. And in this case here, that's really an area where we saw a bit of a breakout inside the Great British Pound. So instead of the 0.618 Gartley buy pattern inside the Great British Pound U.S. dollar, and I have to say, because of the candle formation today, that 1.679 is not out of the cards out there. So we'll pay attention to this if we start to see some small-bodied candles over the next couple of trading sessions moving into 1.688. Then it may set up a Gartley buy pattern. And you want to be looking at some buy patterns inside the Great British Pound because of the weekly pattern that it has broken out of. 877-927-6648. Dow's up 44. S&P's up 7. This is Steve Rhodes. This is Tiger Financial News Network. Hope everyone's having a wonderful Wednesday. I know I am. You should be too, and we'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. So far this morning, a pop and a drop-ish, so to speak. We got the Dow's up 34, S&P's up 6, Russell's up 7 points right now. What I mean by that, let's go back and begin or take a look at where we began this morning. And we were focused really on the Dow futures. I'm going to go ahead and pull up the S&P futures as well and show you another trend line that we want to pay attention to. So inside of the Dow out here, we can see that it has sold off from the celebration of the Q4 GDP or what have you, but it hasn't broken to the downside either. You can see it's trading in through that rising price channel out here. So we don't have really any information other than that it's made another 0.618 retracement and it's run into resistance out here. That's what's going on inside of the Dow. A break of the price level of the low from 10 o'clock in the morning on July 28, 2 days ago. That low, by the way, is 16,808. That would confirm for me an A to B equals CD to the downside out here. We don't have that just yet, but that's what you would be looking at. Likewise, if we take a look at the S&P futures, and you can see here, we've got a line of resistance as well. And that line, this is just a short-term line of resistance. It is the channel line of a down price channel. I'm just using the top portion. If I wanted to go ahead and try to draw the actual channel line in, and what I first do to draw my channel lines, I just simply use a line tool, then I come back and I use the channel tool. And at this stage here, I don't really have a good feel as to where the bottom of that descending price channel is. Maybe it's right there. Let me go ahead and get rid of the line tool. Then you'll get an idea for that price channel. It's really what we want to focus on and pay attention to is the body of the candle, because the body of the candle is really the essence of price. The wicks, just simply nothing more than the extreme emotions. However, the extreme emotion inside of the ES Mini ran right into resistance, which is where? Right at the top of that descending price channel. So on a short-term basis, inside of the ES Mini, S&P futures, they're still in a full bullish mode out there. It has begun a bit of a descending price channel. Not much in the way of damage, because if you go back to the highs here on July 24th, you're looking at a price point. The high is 1985. You're at 1970 as we speak right now. 15 points inside of the ES Mini. I'm sorry, that is not exactly what we would call price damage in the market. So therefore, when you take a look at the descending price channel out here, if the ES Mini can get get above that level, albeit short-term. And I have to say, right really above a close, above that 12 noon session, and that's from the trading session of yesterday, July 29th. That high is 1979.50. That will signal to us, or should signal to us, that it's going to go make a run for those highs back on July 24th. And that's where, if it takes out those highs, folks, and you are short, you got to say why. Make sure that you have a stop. So you can be short, but please make sure that you have stop. We're not there yet, but those are the parameters that I believe that you should be looking at inside the market. Euro Japanese yen, really all that it's done here, as I mentioned, it was moving into that extreme overbought condition out here, and it needed to work its way sideways. That's really what we have seen it do out here, and it just needs to work that up. If I put this on a 30-minute chart real quickly out here, 30-minute chart hasn't really moved its way sideways too much. In any event, folks, thanks so much for tuning in here. Don't forget Hotel California, your gold mine for technical trading. We begin our day at 8 a.m. Our man John Logan kicks things off. I'm with you for 2 hours. That's from 8 to 10. So if you're off to start your day, have a great morning. I look forward to seeing you tomorrow. Otherwise, stay tuned. I'll be back up with you in about 8-9 minutes or so. Have a great Wednesday, and thanks so much for joining us. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.